Okay, actually it's quite easy to buy properties without money down or low deposit. Okay, first thing that you have to do is that you have to think creatively. So I'm going to share with you 13 tips over the period of several weeks maybe, so that we can share this technique to buy a property without any money down or with low deposit. Now, surely buying properties with no deposit is going to require some kind of extra thinking. Okay, you got to think outside the box. So number one, I'm going to give you tips for you here. You can always ask help from your family and friends. Okay, so if you've got a good, strong family relationship, for example, you can always go back to your family members. You know, for example, your brothers or sisters, or even your mom and dad. Okay, to share the deposit with you. One thing is that you can always ask from them if they don't mind, to lend you some money, where you can pay off the money later on. Okay, for example, if you need $20,000 and you share them with your, you probably get 10,000 from your mom, 10,000 from your dad, or and so forth, right? You can always borrow the money. Now, if you sign an agreement with your mom and dad, they'll be very happy with you. I think, you should be able to get some money from them. You can always use this money to purchase your first investment property. Now, make sure that before you buy this property, you have to check with your bank whether you're eligible to buy the property. If you don't do that, then you're going to probably run out into trouble, because once you've got the deposit, then the bank says no, they cannot give you the 80% funding or 90% funding. So that's one of the things that you can always ask from your mom or dad. Tips number two, you can always apply for a personal loan to get some money to pay for the deposit. Okay. Now, if you want to do that, you better ensure yourself that you've got the eligibility to apply for the loan first anyway. Alright, so once you've got this eligibility to apply for the loan, then you can actually go around to other banks, for example, to apply for a personal loan. Okay, so once you apply for the personal loan and they allow you to get this personal loan, you can always wait 6 months down the road and then you apply for the housing loan. Now remember, provided you don't use the money for the deposit, you should be able to purchase the property within the 6 months to 9 months period. Okay, so that's tip number two for you. And if you're a married couple, alright, you can always help each other. For example, the husband is actually applying for the personal loan and the wife used her name to apply for the property loan. Okay, so in that way, you both will be able to actually buy the property with 100% money from the bank, or other people's money, or the banker's money. Now, you would think this is a crazy idea, because to use a credit card is almost impossible. How can you actually use credit card to purchase a property? Well, I'm going to tell you something. If you can buy things with credit card, you can actually buy another thing called property with credit card. So how do you do that? Well, there are various ways. Okay, so you can actually withdraw money from the credit card, provided that you have the credit limit in the in your card. Okay, so as long as you don't exceed your credit limit, you can actually withdraw cash. So if you can withdraw cash, you can actually use that as your deposit for the property. Now that's one way of doing it. Or you can actually transfer some of the money from the credit card into your cash account. So once you've done that, you can always issue a check, or you do the telegraphic transfer from your bank account into the account of the vendors. Okay, so you can actually do this with ease. So credit card is just another way of purchasing property, and it's pretty common if you buy a property in Australia, New Zealand. There's some good investors purchasing property using credit cards. All right. Using credit cards as well, you can actually help your family members or your friends to actually buy items that they would like to buy. For example, if they want to purchase a furniture like sofa, or if they want to buy a cupboard or something, you just assist them. You just go with them to the shop and you just ask them to pay you in cash, and you swipe the card to pay for them. Okay, so at the shop, you bring your card, you just swipe it up, and whatever the charges is, the salesman is actually charging you. Let's say the sofa is costing you about 2,000, so you swipe the card for 2,000, and then you turn around and you tell your friend, can you give me cash 2,000, or can you give me cash less than that? And over a period of time, if you keep helping your friends, you should be able to accumulate some cash, okay, enough for your deposit to buy the property. Right, this is actually using the equity of your current home. Provided you have a property, you can actually use your current home equity to purchase another property. Now, what you need to do is to actually work with a bank or work with a banker that you know, and as long as they understand your needs, and as long as you can convince them, you can actually extract the money from your current property to purchase another property. So this technique is very popular in Australia and New Zealand. Yes, you can try to do it here, but the banks always will counter offer with personal loan. Okay, so it's really up to you and how you talk to the bankers. There's no harm in actually getting the equity out of your current property. Now, sometimes people say that this is not a good idea because you have to pay off your property. In my opinion, that's not necessarily true, because you can always accumulate assets over a long term. Now, there are issues like debt. Okay, so if you take out the money back from the equity of your property, you're going to incur more debt in that property, but that's not a big deal, because what you need to do is if you can understand the concept of assets and liabilities. Now, the most important thing is to make sure that the liabilities is not more than 80% of your assets. So if you can do that, then you should be able to purchase a property using the equity of your current home. Right, another way, number 6, is actually using your current home equity. You can actually use the current home equity to get revolving credit. So this is pretty much like overdraft facilities. Okay, so if you go to the bank and you offer them, or if you go to the bank and if you ask them that you need revolving credit facilities, the bank should be able to offer you some products. Some banks, they have got this revolving credit where they will not charge interest as long as you don't use the money. They only charge the interest. They only charge interest once you use the money. Now, it's best for you to actually work out Islamic revolving credit. Okay, there are some banks that's offering revolving credit Islamically. So I'm actually encouraging you to actually take up the revolving credit with Islamic banking. Okay, Islamic banking system. Now, in this case, you can actually offer your knowledge as the substitute for your portion of the property deposit. Okay, so say for example you know how to purchase this property and your friends are very busy and they don't know how to purchase the property, so you can exchange this knowledge with them. Let's say you need to accumulate about 20,000 ringgit worth of deposit. Now, if you actually offer your knowledge as 10%, if the deposit is actually 20,000, okay, to buy the property, now your portion will constitute 2,000, okay, because yours is actually 10%. Now your friend will have to fork out between them the amount of 20,000, and you don't need to spend any money to buy the property. Do you understand me? It's actually using your knowledge as part of the percentage of the deposit to buy the property. So in this case, you get away with zero money down to purchase a property. You can also use a company as a vehicle to purchase a property. So what you want to do is to actually accumulate from your friends some deposit to open up the company, and you start the Seram Berhad, for example, or any ROB enterprise, and with that money that you accumulate from your friends, you can now try to purchase a property by using the company. The only problem by using company is that the bank will have to look at the track record of the company, the business that the company has actually run. This is probably well known in Malaysia, because you can actually set up the purchase price higher than the price stated on the S&P. So for example, if the property is 120,000, you can always discuss with the vendor, and you can mark up the price that is going to be on S&P as 160,000, and you're going to apply the loan based on 160,000 ringgit. Okay, so if you do some correct calculation, the deposit required from the purchase price of 160,000 should be able to cover all the 120,000 the original price of the property. Okay, so that's just another technique that you can use. You can always negotiate for a long settlement. In other words, you sign your SNP, but you request from the vendor to settle it, fully settle in 12 months or 24 months. Okay, this is pretty common in overseas, such as Australia and New Zealand. Now, when you do that, you should have ample time to accumulate some money to pay the deposit. In other words, you're able to get the loan from the bank to cover the 80%. It's just a deposit that you want to pay to the vendor that you ask them to defer on in terms of the time payment. Okay, so if you're able to do this, you should be able to pay the deposit monthly over a period of 2 years, say. If the vendor is agreeing with you, then I think it should be no problem. That can be arranged actually. We should delay paying the deposit. So what that means is, if you paying the deposit, you can actually request from the vendor to actually delay paying the deposit. So you can actually request separately from the loan. You can continue as usual to purchase the property and apply for the loan for the bulk of the price of the property, right? Like if you apply for 90% loan, for example, that 10% you can request from the vendor to actually delay the payment of the deposit. You can also arrange with the vendor to do the monthly installment. This is practically the same as delaying paying the deposit, but this time you're actually paying the deposit on a monthly basis. So for example, if you're paying 20,000 over a period of 10 months, you can actually pay 2,000 every month. We can request from the lawyer to include a clause that allows us to make monthly installment to pay the deposit to the vendor. You can also help your friend if they're interested in buying properties, okay, for finder's fees, for example. So you just go and purchase a property, investment property for your friends, and you just charge them, 1,000 or 2,000 per property, and you should be able to accumulate your deposits to purchase the property with no money down. So there you go, all the 13 tips for you. Hopefully you can look at our website in order for you to purchase an ebook that explains all the 13 tips or 13 ways to buy a property with no money down or low money deposit. Thank you.